Hey, it's Mac with PriceActionTradingSystem.com, and it is Monday. It's April 6th. This will be our chart lesson for today, and I hope everybody's staying safe and that you and your families are all doing well. I know not every family can probably say that, but I hope anybody listen that everything's going well for all of you and that there's nobody sick or particularly ill with coronavirus or even worse um, in the hospital or in intensive care or anything, because I know there's a lot of people out there that are. And so I hope all our group is blessed and doing well. And I just wanted to get that out of the way real quick. But I thought I'd start off showing a couple of positives today. Um, People like to hear where others have success. And before I read this, I just want to say I don't read any of these positive emails to toot my own horn or pat myself on the back. So I just want to make sure that's clear because sometimes they're very uh, complimentary of me and what I've done, and but I don't want you to think I'm reading the emails about for me. I'm reading them because I want to share the success stories, and so I just thought I'd say that because sure as shooting somebody will come back and say I was trying to pat myself on the back, which that's not my intent. I just wanted to throw that out there first. But anyway, I'm going to read you an email here from a gentleman. He sent me to you. Hi, Mike. Wanted to say thank you for all that you do. I've been trading since 2010, so he's been trading about 10 years, and I blew through 4 accounts in that time, but I never gave up. I have my wife to thank for that, and this is one of the reasons I wanted to read this, so just remember the part about his wife. He has his wife to thank. She has always stuck by my side and believed in me, which helped me get through the hard times. Your daily videos on YouTube and your manual is pure gold. I made more money this past year just trading second entries than I have in the past 6 years. I don't know how I'll ever repay you for this, but from the bottom of our hearts, thank you so much, and may God bless you and your family in good health and love and whatever your heart's desire. Not looking forward to paying taxes next year, LOL, but in a way, that's a good thing. Shows that I'm doing something right. Cheers, and gives his name. And that's right. I mean, that's the unfortunate when you start making money, you got to pay taxes. And I always tell people if you succeed in this, especially, uh, here in the U.S., if you're somewhere else, different countries have different tax requirements and tax rates. But if you're in the United States and you start making money, you will definitely need a tax shelter. So just be prepared. So uh, one of the things I do is real estate. I buy real estate and I use that, rentals. I'm in the rental business as well, and so I use that to help offset some of my taxes. So just keep that in mind. I'm not a CPA. I'm not a tax guy, so don't take any advice from me. Ask if you start making money, you can afford to hire your own CPA. And and people do ask me a lot about taxes, and honestly, I don't even know. I just give it to my CPA, and he does it all. I couldn't even tell you exactly how he does my taxes. I pay him a lot of money, and but he pays for himself. So, a lot of people are afraid to pay their CPA or a good accountant to do their taxes because they don't want to spend the money. But trust me, a good CPA or good accounting can pay for themselves many times over. So don't be afraid to go out and hire you a good tax accountant, especially if you're making money trading. So because you'll need it. But anyway, so that was that. I wanted to share another guy's results he sent me right here. This is just a small thing, but 16 winners and 3 losers. I forget over what the time period was. This was so far this month, I believe. So maybe the last week or so. So that's pretty good. Uh, it's pretty good. 80% win rate. I mean, it just shows you that people can do this. You'd like to see a whole year of this to really get a good feel, but many people couldn't do this in a day, much less a week. Some people couldn't do this, period. So it'd be flip-flop. They'd have 3 winners and 16 losers. A lot of people that are trying to learn this that are new to it, and people that are just trying to trade. And again, you hear me say it a lot. Most of your people that come into this and fail is simply because they come into it with the wrong expectations. They see a video, by some guy that says, hey, it's easy, you can make $500 a day, and they believe him, and they believe he knows what he's talking about, but really he just learned what he's showing you 3 weeks before, and people believe that stuff, and it's don't fall for that stuff. It's not, you can't learn this in a short period of time, and anybody that tells you you can, it's just they got an agenda. They're either trying to get some money out of you by selling you something, or there's many reasons people, but most of them are going to try to sell you something. So they're going to tell you it's easy, and I'll never do that. It's not easy. Once you get a grasp of it, it's not as hard as you think it is, but just the amount of experience and the study time it takes is extensive. And most people don't come into this understanding that. They think they're going to read a book or read a manual, or they're going to buy some holy grail indicator or a little entry strategy, and they're going to become rich overnight. And it just doesn't work like that. So don't let anybody fool you. Don't be that person, because it's not easy, and you're not going to do that. You're not going to learn this by reading a book or a manual or watching a few videos or buying somebody's holy grail indicator or buying somebody's setup. It doesn't work like that, trust me. So you hear me talk about second entries a lot, and they're magical. They really are. But honestly, really, there's nothing magical about them at all. They're just part of price action that we've discovered that's very helpful. So they can increase your odds even if you don't know what the heck you're doing. But you can't just take that pattern and not understand the context that goes with it and make a living. I'll show you that it can sure help you, and I'll show you some more second entries today. But just remember that this is not easy. So, and don't let anybody fool you by telling you that it is, or that you can make $500 or $1,000 a day easily, because 9 out of 10 people that try this fail. So that tells you right there it's not easy. But the reason most of those 9 or 10 fail is because they think they're going to spend $3,000 for this magical, or maybe $395 or whatever somebody's charging for something. Usually the more they charge for it, the more magical people think it is, and the more they're misled, really, and then they start using that little indicator or that little setup, and before long they blow an account, and they just give up and walk away. And so that's why 9 out of 10 fail. They don't realize that they're going to have to put in months to years, more like years. There's a few people that might make it in months, but not many. Most is going to be years before you're successful at this. So just be prepared. I mean, I like to use an example. If you want to be a doctor, a medical doctor, or a lawyer, or some kind of professional like that, or an engineer, think how long you got to go to school. You got to go to school a minimum. If you're going to be a doctor or a lawyer, first you got to get your undergraduate degree in the U.S. That's 4 years. Then you got to go to law school or medical school. So that's another 3 to 4 years. And then you got to do your residency. If you're going to be a doctor, that may be another couple of years. And if you specialize, that might be another couple of years. And if you're going to be a lawyer, you've spent 7 years, maybe 8, getting your law degree. Then you got to pass the bar. Then you got to open an office or go to work for somebody and build your clientele. You got overhead. You got to deal with people. You got all those things to do, and that takes years, 8 to 10 years probably. And even if you just want to be an engineer and go to work for somebody, you got to get a degree. It takes you 4 or 5 years, and a lot of money, And then you get a job and you go to work for somebody, and you got to deal with people, and you got to deal with bosses and all that. So this is not any easier. This pays better. This has no overhead, no offices. Your overhead is a computer and a screen and a room where you can shut yourself in. You can trade from home. You got to have internet, but you don't have to deal with any people. You don't have to rent any offices, you don't have to deal with any employees. You don't have to deal with customers, and this pays better. So you can't expect this going to be any easier, or everybody'd be doing it. So anyway, not to get off on that tangent, but I spent 10 minutes on it anyway. Most of you know how I am when I get on my soapbox, so to speak. But anyway, something else I want to talk to you about I get a lot of questions on how to enter, and people are really confused about that. All right, let's just say this is your support here, and you want to enter where I've circled this here. That's a second entry long. Add some support. It's not a perfect signal bar. That's why it's not circled blue, but I circled it anyway. I'm just using this as an example. So if you want to enter right here, this is your signal bar right here. Let me move this out of the way. I'm going to make this bigger. This is your signal bar. And what most people think is that you got to wait on this bar and then you're entering up here. Well, you've already missed too much of the move. You can't enter one tick early. You can't enter one tick late. So what you're doing is you're waiting on this bar right here. It's sitting there forming and forming. And as soon as this bar closes, if you got to be anticipating that, hey, if this bar closes bullish and I like this setup, this is a great place to be looking for a long. It's an uptrend. This is the first overshoot, the first break. I got a two-legged correction here. It's really two legs on a bigger pattern. If this bar ends right here like this, bullish, I'm probably going to go long. So I'm going to drop a buy stop right there. And then before the next bar breaks above it. So this is your signal bar. It's always the lowest bar in the swing, or if you're going short, it'd be the highest bar up here. It's not this bar or this bar or this bar. It's the highest bar. Same thing here. It's the lowest bar. It's not this bar, this bar, this bar, this bar. It's this bar. That's the one you'd be going long above. And you gotta be anticipating what's going to happen. You know you're back to the key entry point, so you may get a setup right here. So be ready. As soon as that bar right there completes, because if everything lines up and you're thinking of going long, as soon as that bar completes and closes and the next one starts printing over here beside it, go ahead and drop your buy stop right there. And then you won't know if it's going to get triggered. People say, well, how do you know it's going to get triggered? How do you know you don't. But you can read the chart, you know you're going up and you're looking for a correction to enter on, and if this is the one that you decide that fits all our criteria, you're expecting prices to break above that and take off again. So now you put your buy stop in there, and if it executes and your order gets executed, your sell stop has to go one tick below that bar, which is down here. So the next bar comes, and so yeah, you would have gotten filled and scalped out all in that already quickly, and your stop would be down here, and you'd probably have a runner at break even now. And then off it goes. It just keeps going bar after bar. And it finally overshoots this channel again, and it turns back down. Comes back down. Well, there's your setup again. Notice that new high you're working down. That's a first entry right there. It pulls on back to the trend line again, back to this kind of support area across here, and gives you a second entry long right there. Nice bullish bar. So when that bar completed, I'm going to right click and drop a buy order in there. And wait and see what happens. And guess what? The very next bar, it breaks higher, it triggers my order. I put my stop one tick below, which is right down here, and I'm entered. So you actually enter on this bar, but this is your signal bar that sets up the trade, and you put your buy order above. And if you're going short, again, like right here, let's say we're going short, that's a second entry short, you would put your sell stop one tick below that bar, and if it's executed, and prices start heading lower, put your safety stop one tick above that. And it's that simple. So you don't enter on the next bar, the next bar. If you've missed that one bar right there, you're too late. You can't chase a trade and put it in way down here. Or let's say you wanted to enter here on this lower high. That would be your signal bar. Notice that makes the swing high right there on that next little swing. So your sell stop would go one tick below that. And if it was triggered, which it wasn't until 2 bars later, you may still take that trade because it's probably, look at all those stems. You can tell prices are still trying to go lower there. Many times you wouldn't want to take these inside bars though. But just assuming it broke lower there, you'd put, and it triggered your order, you'd put make sure your safety stop went one tick above that bar, and you're watching prices go. So I hope that's clear. This goes right here. Oh, that one was there, and that one was there. Okay. All right. So I hope that's clear on how you enter. It's just, and I hate to go over something that basic for a lot of you, but man, I'm just getting bombarded by questions asking. People are just really confused, and if you're off on the wrong track, it's hard to get back on the right track till somebody shows it to you. So anyway, now I'm going to show you some second entries. Let me back out and show you the big picture today. Here's the big picture. You can see it's a spike in channel. Originally, I was looking at the brown channel being a possibility. It really didn't work out, and so I reevaluated, and in the end, I think it was the blue channel. When we broke right here and then bounced again, of course, you want to draw it off that one too. And then when it bounced there again, then I got confirmed on that one. So then you're looking at this blue channel. So, but early on, I was looking at this brown one, and it looks valid. But it really never came back into play again. So I left it on there just so I could show you what we looked at earlier. And then, but this is what we had. We had a spike up in the channel, and you can see that channel came into play. That trend line was playing all day long. Notice that your first leg up is right there. You look for a measured move, and you can see we got a perfect measured move. I mean, really to the tick almost. Doesn't get any better than that. I had another, oops. I hate when I do that. Can never grab the thing you want to grab. I'd also measured this leg up, and when the correction came right there, look for a measured move, and notice where that one went to. Right to where you got a correction there. To the tick once again. And prices corrected a little while and then took off again, heading for the bigger target. So these targets work, and they help keep you in runners and things, but you can see that spike up, and then we went to a channel. There's also another little shorter term channel right there, but that was in the early overnight. Usually I won't put those on there, but I've been trying to put them on there just so people can see them. But now I'm going to show you a couple second entries, and we're going to wrap it up. So notice we had a correction here that lasted from, I'm not sure what time this was here. Chart's going anywhere. I don't know what's happening. That started about time there is a little before 1 in the morning my time. This dark colored stuff here is in the overnight, and we don't usually start trading till 7, so this would have been your first opportunity at a trade. So really from 1 o'clock till, well, actually the correction lasted till way down here. So it's about a 7.5 hour correction. So even though it looks small in the big picture, that's a pretty major correction. So this trend line is valid right here. So you want to be trading it. And notice you made a new low, first entry, and you did get a little break here, but it's still a second entry short. Look how far away you are from the EMA. Very bearish bar. Nice, very bearish signal bar. Just put your stop. You may not have got in this one. Notice how it gapped. It didn't. It just closed and instantly opened and shot down. So you may have missed that one. But let's assume you didn't get your sell stop in there in time. You can always put a limit order, sell limit order there, and see if prices will back up and fill you. Maybe they will, maybe they won't. But you can try that. The best trades it'll take off and you'll miss, kind of like this one did. But this one didn't. It did come back again. So if you had a good signal bar here, you could have taken a lower high on that one. My signal bar is too neutral there. It's more bearish than bullish, but I'm still not crazy about that signal bar. But this is a nice second entry short. If you could get in it, great. Here's another second entry short. Notice the new low. And you got a first entry, then you went higher again. Second entry, another huge bearish bar. Just put your sell stop one tick under that. Boom. Another quick, easy second entry trade. And so it's barely even 8:30, 8:33, and you've already had 2 nice second entries. Easy to spot ones for the most part. Then we get this. Then we hit the bigger trend line here and rocketed up. and you get another second entry right here. And there's probably some more in here. I just picked out the ones that were easy. And those prices come down first entry, then they went lower again, and then broke back up here in second entry. They actually broke lower and turned and went out. So you could have put a buy stop right there when it came back through, or you probably better just to wait on it to complete, put a buy stop above it. Another quick, easy trade. Notice there's a second entry right here too. Not a very good signal bar on mine. And then you got a little horrible inside bar too. But then you make another high. This swing high is higher than that one. So that's a new high. First entry and then second entry right there. I made this one purple because again my signal bar is not very good. That inside bar looks nice, but it doesn't make an equal low. So it's just not a very good setup on mine. But it just shows you that if you wait till prices come back to the key entry point and you get a second entry, it doesn't even matter on the signal bar. Although I'm not telling you not to worry about the signal bar. I still filter all my trades on my signal bars. They'll save you a lot of losers. Sure, you'll miss a trade or two like this sometimes, but I'd rather miss one than reinforce a bad trade. And I don't know if I'd go short here, but you're so far away from the EMA, and notice that new low right there, first entry. So that's a second entry short, way away from the EMA, exactly where you're expecting prices to turn at the upper trend channel line. This is supposed to be back down here. So that's plenty of room back, and we're probably, when prices turn here, where would you expect they're going? They're at least going to the midline and EMA, but they're probably going to come back to the trend line because that's what prices do. They go back and forth between the support and resistance. So that's a good place to enter. And again, we talked about the lower high right there. Then you get another second entry right here. Notice first entry, second entry. Again, I don't like my signal bar, but I just wanted to point out an easy second entry. And that one has a matching high, so you can treat it as the signal bar. Again, it's not a very good signal bar, so I don't like it either. But with one leg down right here, you would expect another leg, and there it is. Then we come back to the trend line here, so we start trending up, and you get a shorter term one in here. And there's a couple of second entries off this key entry point right here. Because this channel is so big, you're not going to get a lot of touches off it. So find your shorter term stuff in here and use it. But notice that high, first entry, second entry. Again, not a very good signal bar. That's why I drew it purple. But I just wanted to show you that you don't even have to be a rocket scientist if you can find the second entries. Here's another one, and I wanted to show you this one because it really made a new high there. So technically, by the rules, that's not a second entry. But guess what? If you look at that, can you not see the one swing, correction, second? There's still two legs back to the EMA and the trend line. And if you got a real, plus that's a little bit of a sideways, so like a little range, that you could treat that like a little failed break lower. And that signal bar is really kind of neutral, but if it was a nice bullish signal bar. But again, if it just two legs back to the EMA and the trend line, boom, look at it take off again. I marked this one. This was not even a second entry. What this is was just a nice signal bar off the key entry point. Here's another one right here. You could have entered on any of these and had a good trade there. And look at it, when it got back to that trend line, how it takes off again. And we got an overshoot here. We actually had an overshoot here. And generally when you get an overshoot, it's not going to be long until you get a break of your trend line. And notice it came right here. And that's a two-legged correction. There's your new high, first entry, and then second entry right at the key entry point. And that's a nice bullish bar. It's an easy one, easy second entry. Then you make another new high. It's higher than that one. First entry, second entry. There's you another. That's also a double test. I made that one kind of the purple color because it's not a very good signal bar. But notice where if it's in the right location and it's a second entry, it probably still works. I didn't even mark this one. Well, actually, that's not a second entry because that didn't make a new swing high. First entry. You can still see two legs back there. I mean, use your eyeballs. Even though that broke higher right there, that still all looks like one move down. So that's still two legs back. If I had a good signal bar there, I mean, I'm going to take that trade right there. We'll make it the lavender color or whatever it is. And then, of course, you could treat that like a double test too. So there's multiple reasons to enter that trade. But this is a trading range. You can see the clear resistance. Notice how we're bouncing on the same place. Down here, we're bouncing the same place. It's another good trade right there. Double test. It's not a second entry, but still a good entry. Look at it go. And I didn't mark any after that. One other thing I wanted to show you is this little, somebody asked me about this, and this is not really the example I want to show you. Notice what happens is prices, notice that you got a little resistance there. This is not really a range. This is just a little two-legged correction. But notice you still got some resistance. And when prices break through, what do? They pull back and test that. Because that was resistance. Let me just draw the lines where you can see it. And prices pull back and test it before they go higher. And then you get a little more resistance up here. And prices break out, they pull back, and really here they just tested the trend line. They didn't really test that. So that's not a great example of it. But notice how we had the resistance here. We push through, we pull back, test it, and we go higher. And that's what prices do. And you'll see the same thing coming down. Prices always like to go back and test previous, just like on this trend line right here. We finally break through a few times. We finally get through there, and it comes back and tests it. It was acting as resistance. Then it acts as support here, and it rockets off. And you'll see that over and over. Here's some more resistance right here. Notice that. Prices break out, they pull back and test it, and then they go forward. I wanted to show you some to the downside. But you'll see that over and over. Here's a little resistance right across here, and prices, actually that's still an uptrend, I'm sorry. You don't see as much of it here. It's not a good steep trend really though. This is more sideways kind of stuff. But I'd probably have to go back a day or two here. Let me go back to where we had a little downtrend. All right, here's a downtrend. But notice you had a little resistance. Prices break through. They pull back and they actually had two legs back to test that one. And they break through, and right here they tried to pull back and test. Then you're working down here, and you even had a little bit there, and you pull back a couple of times and test it. You had a little resistance here, and it looked like prices weren't going to pull back and test it. But look, they come back, and they turn back down again. Now you got a little support right there. Prices break through, they pull back and test it. You got a little bit right there. Prices push through, they pull back and test it. So price action is always testing previous support and resistance, and it'll, and what was support, if it's going to continue on moving through, will turn into resistance, and what was resistance, if it's going to continue to go higher, will turn into support. So I hope that's clear, because that came up with another trader today, and I thought I would share that with everybody else. So anyway, we're right at 30 minutes here, so I'm going to wrap it up. We'll be back again to do it tomorrow. We'll talk about a few other things. I want to talk about repeat patterns. I did talk about support and resistance tests, but I want to talk about repeat patterns. There was several of them here today, and I didn't get a chance to talk about that, but we don't have enough time. So I'm going to wrap it up. I'll see you tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.